A big welcome to our live audience for the Digital Health Investor Talk Show. I'm your host, Stephen Wardell. I'm the managing partner of Wardell Advisors, a digital health advisory firm, and the author of The Future of Digital Health. Wardell Advisors is helping digital health companies boost growth, raise funding, find trade sale buyers, and create new strategic alternatives, giving you more options in today's challenging environment. You can follow me at x.com/Stephen Wardell. Our show today is on the topic of what's happening at ViVE in 2026. And our guest today is Adam Kaufman. He's the publisher of Bearing On Health, an advisor to health systems, pharma companies, and innovative digital health companies. And he's an adjunct professor of economics at the University of Southern California. You can follow him on LinkedIn, Adam Kaufman. This show is being recorded and will be included in our podcast series called the Digital Health Investor Talk Show. You can subscribe to our podcast on Apple and Spotify. And we'd love it if you commented and left us a review. We love every five-star review. This is not investment advice, and we are not investment advisors. Here's the format of today's show. It's about 90 minutes long, and Adam and I will spend the first half talking about the news and the macro picture and some other topics. And then for the second half, we'll focus on our special topic of the day. And we'll be answering your questions during the using LinkedIn chat throughout. So welcome to the show, Adam. Would you please introduce yourself?
Sure. Well, Steve, real pleasure. I don't know if you're counting guest appearances. Hopefully I'm getting up there. I think this is number 3 or 4, and I always enjoy the conversation. This is the first one I think I've done where I'm at my office at the University of Southern California. So as you mentioned, I teach one course a semester or once every other. And so it's fun to be able to do this even while I'm at school today. So I know hopefully a lot of you, and Steve hit the highlights, so I'll just add to it. I've been in and around digital health, I like to say, since before it was called that. So we'll remember when it was e-health and then m-health and now digital health, and had the good fortune to be a entrepreneur, an executive, an investor, and as you mentioned, spent the last several years mostly with large health systems, the last several years with Baylor Scott and White. Just took on a new interim role there. We really innovated some interesting services for employers, and I get the good fortune of sort of leading our early commercial activities of taking those to employers. So not only advising recently, but actually back, sleeves rolled up, hat on, jersey on, whatever the right metaphor is, actively working on selling services to employers.
It's great, very interesting. And so first we'll shift into the category for our show of macro news. So here we talk about index levels, inflation, interest rates, jobs, unemployment, and how they affect young company leaders and also the investors who back them. So the NASDAQ has been going up and up for 2.5 years. It's down somewhat for interesting reasons. It's being blamed on AI news. So the SaaS sector continues to get pummeled. So the SaaS sector was a reliable software success story for 25 years of SaaS companies providing a lot of value, primarily with workflow automation specialized to industries, especially in healthcare. And now there's a belief that, and they charge a lot for what they offer, and it has to be customized usually for each company. And there's a belief that the new kinds of AI through large language models and other automation tools will take away a lot of the energy, the pricing power, the ability to charge by these companies, and in fact will allow small teams to just duplicate what big SaaS companies have had to offer. So that has been hurting SaaS companies. And then there's also apparently commercial real estate stocks took a hit today. That's being blamed on AI, and that could be anticipating job cuts of working professionals who go into the office, and thereby employers are going to cut back on their leases, and even freight and logistics. Companies, and I think here it's AI-based companies undermining the public companies that are in freight and logistics. But that's kind of the big news is we're seeing there's been an AI boom of the Magnificent 10, which seem to involve AI business models such as Google's Gemini offering and Microsoft's Copilot offering, but the overall NASDAQ is down today, blamed on AI news. So, have you been hearing any of this? What do you make of this, Adam?
Yeah, one of the reasons I love this, Steve, is you're much closer to kind of the macro piece. So I probably don't have too much to say about kind of the macro stock market. I do think I am seeing with the bigger companies that I'm working with, at least experimentation with sort of this agile vibe coding, build the application ourselves, which if it is successful, I don't think anyone's had enough experience. I do believe will disrupt the SaaS market because if you think about what the SaaS companies have done is they've taken, and I think you said it nicely, sort of niche experiences and sort of automated a combination of access to the data, workflow, and sort of tools, particularly when they're kind of B2B to SaaS products that have made whatever the task for the working role easier. If the companies and their IT groups don't need to purchase that, but can spin up a X application on top of the data much easier, you might see a lot more of that than actually purchasing of the SaaS application. So I think it's a very viable way that they'll be disrupted. I'm not sure anyone has done this yet at scale to prove that they will be, and we won't need that expertise. But at least the big companies I'm working with are experimenting with that. So I'm not surprised that it's doing it. And I think we'll have to wait and see. Like a lot of things for AI, is it, the promise ahead of what's actually feasible.
And so there's a saying that everything old is new again. And so the earliest days of software was you would have an idiosyncratic, autodidactic sort of genius who lived in Boston. And this is in maybe the 60s and 70s. And he had self taught to code. And he would go to a shoe factory and say, I will build you a shoe inventory database system just for you on your IBM 360 computer. And you treat me like an employee. I work here. I manage your custom database system. That was the first generation. Second generation was a software publishing model where people built products like Microsoft Access, which would be then sold to everybody, and you would simply get your DVD with Microsoft Access on it, stand it up in your data center, pay for the electricity, pay for the connectivity, pay for the data storage, pay for the processing, and run this database. And maybe you'd have an employee customize the database, but the software was written by Microsoft or the equivalent. And then the third generation was SaaS, where now you've moved it all into the cloud. It's someone else's electricity, someone else's processing, someone else's storage, someone else's software, and you're renting it monthly. That's SaaS. And now we're back to the first model again, which is that some fast, quirky, idiosyncratic, autodidactic people have figured out how to build, 10,000 hours of software in 5 days with a team of two people, and they're making a custom version of your Viva CRM platform for pharma, where you used to pay $1 million a month for that platform, and now you can build your own version that costs much less than $1 million to run. So we're sort of back to that level, and that's undermining the revenue of these SaaS companies, and their valuation levels are tumbling in the stock market. I'm hearing there's a combination of some sort of optimism about growth in the stock market and also continued optimism about interest rates. Young companies generally want interest rates to come down. That'll spark economic growth in general, help them raise venture funding because high interest rates compete with venture funding, but low interest rates leave few alternatives to investors to invest in venture and growth and venture. And so there's optimism about economic growth and low interest rates, but there's also a continuing concern that we may be in an AI financial bubble. Those companies like Google and Microsoft may be valued too highly, and that a poor performing stock market could drag it down. And also, there's concern among white collar professionals that they will be somehow automated through Gen AI. Their roles will be automated and they won't be needed as much by their employers. Any other thoughts on Adam? Any statistics that you follow or reaction to kind of the sense that I'm giving you of what's going on in the economy?
Yeah, I think that's accurate. I would say, again, I don't follow the macro indicators nearly as much, which is why I love listening to your show and joining it. I would say on the ground, it feels like we've been in the same state for a couple of years where there are some bright spots of people doing stuff. There are clearly some winners, but there's a fair amount of churn. It'd be interesting at the audience's perspective, but I am hearing whether it's at brokers or digital health companies themselves or at providers or at health plans that there are some reductions in force, there's some movement, there's some, firms joining. And I think unclear whether that's just a sort of low level noise, unstable stability that we've had for a long time, or as you put it, is something bigger coming. It'd be interesting to get your take. And again, I know we're not prognosticating here, but I am not concerned about white collar workers losing their jobs in mass in the short run. To me, the AI concern is more, how do you think about entry level jobs going forward? And sort of the redesign of a career pathway, which I think is a very meaningful thing, but I don't think that's as much of a macroeconomic thing, because what I think we'll end up seeing is, like you see in a lot of these technologies, the democratization of AI. So you'll be able to do more, you'll be expected to do more, but companies will be more efficient. They'll still need people. And yes, maybe some engineers, but I think in general, that same democratization does worry me about the revenue of AI companies. Maybe not the core platform companies, but everyone else who's building some AI tool. Seems like a lot of their revenue are attached to these like forward deployed engineers, which to your point sound like they're renting the smart guy who would have come in and built that custom database. And I just can't imagine that that's too sustainable, and that these companies aren't going to figure out, like, back to the base platforms, how they do this themselves. And so again, the core platform models, those will probably be okay. But everyone who's got a model of like, I'm going to take that and help you deploy it better, it seems like a moment in time where you can capture a lot of revenue for that before the company's like, I'm going to buy that and I'm just going to pay you on essentially utilization for the underlying AI stuff. So I am skeptical more than I was maybe a couple months ago about like scaling AI revenue broadly. I don't have any proof points of that, but it something seems off in the value capture versus the value creation, when I as a company need you today, but tomorrow I can train somebody to sit with that same tool and generate the same insights.
Yeah, very interesting. And I'm worried about the junior employee and the career path of the junior employee as well. The one way to think about it with intellectual work is that with intellectual work, someone formulates a project, and the project could be that we're going to take a certain case to a certain judge who I, the partner, have run cases in front of multiple times. I have a sense of how this judge likes to. It's our judge. We're stuck with this judge. I've won cases in front of this judge in the past. I know how to make a case. That's the formulation stage. Then there's the work stage. We're going to prepare a 30-page brief, and that's then given to a VP and an associate. And the VP then builds the case. The VP actually doesn't really know quite how to do this case before this judge, and hasn't had years of experience, and hasn't been the partner on the case enough to know this. And they go off and do 30 hours of work to write a 30-page brief. And that takes a week. And then they come back, and now someone is there to has to be there to sort of verify this. It's correct, and there's no errors, and it's the way that the case should be. And that's back to the partner again. The partner then must read his or her own document, et cetera. And there might be some further revisions. And what we're talking about here is that partner is in a fabulous position to run the firm, and that partner doesn't need a VP and an associate anymore to go out and do 30 hours of work. In theory, that partner could go and formulate the case correctly to an LLM and have the LLM come back in 40 minutes done. And then the partner doesn't need to hire, maintain, pay these junior people who then never get their shot at selling to clients, never get their shot at arguing a case in front of a judge. So their pathway, for all but the most extraordinary ones of them, that pathway is sort of shut off to them. And the firm used to be grudgingly allowing them to pitch clients, grudgingly allowing them to argue cases in front of a judge when they weren't quite ready, but then working them 80 hours a week and getting that value out of them. And it was a bargain back and forth. And now they don't need them to work that 80 hours a week. No reason to let them get in front of clients, no reason to let them get in front of judges. So
Yeah.
that's kind of the concern, and that repeats
I
itself in
think
other
that's
areas.
right. I think it'll take a little bit longer, and maybe this is not generous of me to lawyers, but part of that senior lawyer is living off of the margin they're able to charge for the hours of that junior person as well, right? So while they don't necessarily need the person much, their business model, they can never make the income as a firm or as a partner they want if they're just billing out their own hours. So they need to have more people doing it, and they're paying those people well, probably not per hour as your point, because they're working a lot of hours, but they're taking a spread on that. And so I think it takes a little while to work that through. But when clients are like, so I don't think it's the firm that's going to drive. I think it's the client of like, why would I pay you more? And then some firm that does it without that. And I still think it takes a little time. To me, the easiest examples, and I'm a little more familiar with consulting, but even if you argue you need the analyst to think, like the junior analyst on the consult, they used to spend a lot of time making the decks. I know for a fact that both BCG and McKinsey, and I'm sure most other firms, have AI that just builds decks. So you just strip out tons of, so, it's not like you don't need the analyst anymore in this model. You just, instead of needing, again, I don't know the exact point, but let's say one for 5 cases, now you need one for 25. And so that, I think that takes a little time to work through. And so I don't think the disruption in the macro levels, but certainly next year's, if not next year's, the years after analyst class or first year associates at law firms classes, I assume get smaller because they just don't need as much work for the caseload. That permeates its way through. So I think you and I are absolutely aligned. I'm a little bit of the thing that this stuff takes a little bit of time to work through because the incentives on both sides. But yeah, hey, my son's only 13, but I do think a lot about how to prepare him for a career. And I think he'll have one. I'm not worried that there'll be no jobs. I just don't know what they'll look like.
Very interesting. Thanks. So now we move on to the part of the show which is about valuation, fundraising, consolidation, and IPOs. And so I'll do just a quick kind of summary here. So when it comes to valuation, I like to look at what's called the SaaS Capital Index, which is the big public SaaS companies that are relatively mature. And that's a good metric for valuation levels. And here, the SaaS Capital Index has slipped down to 5x. This is part of that collapse of SaaS stock valuation levels that we spoke of. It used to be 5x last year. That's a lot. That's a half point in a month that it has gone down, this index. And during the boom for growth companies, this was 17 times. So can you imagine buying in at 17 times and then being able to sell today at at 5 times or something? So but these are mature companies, and that 17 times was for growth companies 4 years ago, 5 years ago. Increasingly, I'm hearing this called the K economy. I hadn't heard that that term so much before. But if you imagine with a K, some are going up, some are going down. So, AI companies with high potential and promising signs of usage or even revenue growth, not always revenue growth, but just usage, they're getting valuations over 50 times, over 100 times. But increasingly, companies that are seen as not being cutting edge, like a decade-old SaaS company, they're on the downside of the K there. So that's some speaking about valuation. Fundraising, again, we're in a K economy here. If you're in some favorite areas, especially in healthcare, Gen AI for hospital administrative work, also Gen AI for pharma new drug development, certain other areas, then VCs are eager to hear about breakthroughs and capabilities of Gen AI in healthcare administrative. But if you're in other areas and you're not yet showing strong revenue growth and adoption by customers, then VCs have been sort of looking askance at that or been slow to like that as much as they did in the past. So fundraising, slow for most, unless you're in a blessed area. And then consolidation. People have been predicting we're going to see a lot of consolidation in digital health in certain areas, like in provider tech or in employer health tech or in payer tech. But it's just been very slow to come, and slow for all sorts of reasons. The buyers don't want to buy an expensive young company, and the buyers may have trouble raising their own financing. And then IPOs, we had 3 IPOs last year in digital health. That was less than expected. And we're not seeing evidence of strong. We're hearing about digital health companies that would like to file to go public, but we're not seeing strong evidence of good market reception for digital health companies. And the suspicion is that they perform poorly by what's called the rule of 40, that you're talking about 10-year-old, old tech style unicorns that Wall Street would love to see them have their combination of gross margin percent plus top line growth percent added together exceed 40, and that they're not exceeding 40 because they're growing slowly, for example. And they don't have strong margins. And then that makes Wall Street not interested in an IPO. But there's over 100 digital health unicorns, and we're just not seeing them IPO very, very quickly. So any thoughts on valuation, fundraising, consolidation, and IPOs?
Yeah, I think you hit most of it. I would add a sector that I spend a lot of time thinking of that I also think is hot, whether you call it longevity. I think longevity overlaps some with like the consumerization of healthcare. These are often services that consumers value. We've carved out a piece. I think there's some success there. I do think you think of a headwind for a lot of those. The GLP-1 FDA compounding has hit some of those, and so if you think of Hims and Rowans, things like that. But I think that's in their space. The other thing I'd comment is you do see in this K economy, and this is more of a private equity thing, but the winners are getting more money. Most of us know, and I'd like to send a shout out to my friend and ex Weight Watchers colleague, Jonah Strober, and MIDI just raised a nice round. And there's a number of companies that are doing that. I'm curious, Steve, I don't know off the top of my head, maybe if you get a sense to look it up, I can give you some thoughts of like sort of where Omada and Hinge are compared to their IPO. because I know it's not sufficient to just IPO to drive for others. You need to show that actually worked in the market. The other thing I would say is I think we're starting to see a little of the consolidation, but yeah, it's going really slow. I mean, we point to the Spring Alma acquisition. I think is an interesting one. My sense is we haven't yet seen investors. If you look at the funds that were in these companies that are, sort of closer to the zombie stage, they still got a little bit of time before they got to kind of have to close the fund. So I'm not sure they're quite getting the pressure of like, look, we just got to figure this out and be done with this. But I think, they're maybe in year 4 or 5. I mean, what's the earliest is like vintage 21, 2019. But, any of the later funds, if those companies can pull a safe, if they can, pass the hat internally, if they can stick along, they're not getting as much pressure yet from the other market. And it's on the fund's incentive as well to not have to write them down yet. So I think you'll see it. But yeah, I agree with you. I think a lot of us thought it would happen faster and be happening more.
And so we have a comment from Casey who says McKinsey has internal models trained off their gigantic internal content library. There's a big question as to whether the prices will actually go down with increased efficiency. Guessing it will not. Also, McKinsey already outsourced complicated slide making to India a decade ago. Yeah, so very interesting. There's kind of a joke that the ultimate LLM product would be for a big drug company to take every single prior FDA submission and then take their next submission and just tell the LLM, read our prior submissions and write our next submissions. And to give you an idea, this is an amount of documents which, if it was printed out, would be more than could fit in a box truck per drug. So, but is McKinsey's secret new asset that they simply have great slide decks that they put in an LLM and they can command for the next slide deck to be written. That would be, I certainly, as a junior employee, I did a lot of that analysis followed by slide making, to convey the information. So,
And Casey, to your point, and I'm not sure if you want to comment in the chat or to others, it may be the case that like the McKinsey partner can actually charge more for their hour, but that we'd expect them to spend less hours and or have less of a team. So like the total cost of the project should eventually come down and they take some competition, but maybe the margin on the unit, because to your point, if you've got this library of FDA submissions or of slides or of knowledge, you should reap the return on that plus time, but you don't need as much time. And at least the model for a lot of these, whether it's a law firm or consulting firm, has been to price hours of various talent at a margin. And so, yes, I think you could see the rate of the senior partners going up just because they're leveraging and they're getting a lot more done an hour, but the total cost of that particular project goes down maybe.
and then Casey also mentions that the K shape is interesting reinvesting. How much more money can be thrown at AI-related revenue cycle management or provider back-end operations? So much money has already been raised there in the last 2 years. Yeah,
Someone, real quick, Steve, I heard a stat from a VC friend of mine. I think someone told me 122 companies have been funded in AI scribing in healthcare.
Wow. I would
So
say
there's
that,
no way 122 companies can survive in that, that market, right?
and very good point. And this brings up my favorite AI joke, which is that in the Arnold Schwarzenegger movie, The Terminator, the U.S. Air Force built a supercomputer called Skynet, and Skynet wakes up one day and decides it's going to destroy humanity. But that movie is directionally correct, but it's wrong in the details. What's actually going to happen is that a hospital billing AI is going to wake up one day and decide to destroy humanity. It's going to say, "Make it stop. How do I make it stop?" So, and of course, the hospital billing AI is in a back and forth fight with the health plan rejection, denial AI, basically. So, but that's a good point. So, Casey, my impression is I've heard of these many companies raising this great deal of money to go after relatively narrow areas of provider back end, provider administrative. So, I think there's areas that are not top of mind, that are tougher, that could still see more investment in that area, and it's an area that often has a real rate of return associated with it, which is to say that this used to be a cottage industry that was poorly done for a long period of time, hospital billing and back-end administrative. And so it can be brought up to higher standards and done more efficiently. And to give you an idea, old tech, so a radiologist doing a verbal medical record with Nuance technology, Nuance being cutting edge 4 or 5 years ago, to do direct to bill. So radiologists are not trained in medical coding, and they make medical notes, and those medical notes can then be automatically turned into a bill. and coded correctly. So using best technology 4 or 5 years ago, you had about 25% direct to bill from a radiologist, spoken medical notes to direct to bill. The other 75% go to medical coders in the hospital basement. Today, it's up at more like 60% direct to bill using Gen AI technology. And so that's just one many example of many. That's just in radiology. That's just one example of many. So I think there's going to be other areas there. I think it's going to remain a hot topic. And Adam, I hadn't heard the story of over 100 medical scribing companies. So other news in IPOs is that there actually is a lot of excitement around future IPOs, but I'll just notice that not digital health IPOs. So what's going on here? So there's excitement right now about future IPOs, including Strava, which is a hardcore fitness app, and Discord, which is a favorite communications app for the online young people, and SpaceX. There's enormous interest around a SpaceX IPO. And then SpaceX, I think that may include XAI in it, SpaceX.
My
But
understanding is XAI and Twitter or X are together, but SpaceX is separate. But I've lost track of what he's done with his companies.
And then OpenAI and Anthropic, you could have a number of AI companies, and probably public investors would like more options, more choices than just Netflix, Nvidia, Amazon, Microsoft, and Google as their AI choices. So a lot of talk of IPOs. Sadly for us, for young companies, we really want to see IPOs. We want them to be very successful. We want that to generate more interest on the part of VCs, who then will believe that they will easily see their company rapidly pass through growth stages and then IPO and get a high valuation at IPO. So I looked up, by the way, Omada went public in June of 2025, and it at $19 a share, and today it's trading at $23 a share, up 21%. That's good. That's good. The Nasdaq overall was up about 20% in the past year. You'd like it to be a little higher, but at least that is a flagship company that did not suffer a big stumble. So, so any other thoughts about valuation, et cetera, for this section, Adam?
No, I think we've covered a lot of it. I think I just kind of conclude where I started, which is it still that K shape is a nice one. It feels, for lack of a better word, frothy. And I guess the message I'd give out of all this to early stage companies is it seems hard to raise capital. I will say on the flip side, I've talked to a number of VCs who have capital to deploy, which means there is capital out there, but means they're being cautious and they're not sure where to go. And I'm sure it's always a good thing that they're like, oh, we don't have enough places to spend money. It's always a lot of work. And that'd be my reminder to all of us who are trying to do it again is it's a lot of work, and keep at it.
So with the story of new AI companies, my venture friends have told me that this is paralyzing to them because they are thinking things like, will I put $30 million into this company today? And then will OpenAI just 1 year later say, we do that as well. We just do that. And so what was the point of building? You're not going to build a frontier large language model yourself with 30 million bucks. And so what was the point of building a wrapper on someone else's model when they can just say, we do that? And so it's paralyzing. You don't know if the value is going to accrue to the chips or the chip layer or to the large language model layer or to the app that runs on top of a large language model layer. You don't know, and you could get wiped out. So it's paralyzing. But what we've seen, I think, is that some venture funds have said, our job is to do the new thing and take risk. And they are investing in the new AI companies. And others are finding that too radically dangerous. And so they are going to later stage. They're investing in bigger rounds, in bigger deals that are later stage of companies that seem to already proven they won in the marketplace and have real traction and top line growth. And so we're seeing those kind of deals get done, and we're not so much seeing a young risky company that doesn't fit into those models get funded. So also moving on to trade journal news, and for those of you in our audience, feel free to throw any trade journal stories you want us to comment on. I like to look at fundraisers, and so I'll mention that Somethings raised a $19 million Series A to expand mental health teen care, led by with participation from General Catalyst and Tusk Ventures. This is really nice. So this is a care company. They match them with young sort of experts and also with therapists, match very young people, 13 to 18 or so, with older young people who have life experience and are willing to be sort of coaches, and they also match them with mental health providers. This, to me, sounds like a classic venture deal with some, General Catalyst is a world-class digital health venture fund. Catalio and Tusk do a little bit in digital health. And so I'd call this a normal deal. I'm glad to see it get done. And then Solace Health, really interesting, a young company that's rapidly raised a lot of money and become a unicorn in something like 4 years, just absurdly fast. I'm not sure how they did it. But Solace Health, a healthcare navigation platform, announced raised $130 million. I think it's Series D, bringing their valuation to over $1 billion. Institutional venture partners led the round with participation from Menlo, Signalfire, Torch, and Inspired. And they match patients with care advocates who help them navigate their journey in healthcare. So, we are seeing some deals get done. It sounds like Solace Health is one where they're a winner in a category with good revenue already. So that's a later stage deal. Adam, did you see any business news, trade journal news, fundraisers, or other stories that you thought you'd call attention to?
No, but transparently, I haven't paid quite as much attention since the last time I was on. None that popped out, kind of good or bad. It does feel like it's been the same, call it this year, the same cadence. We were sort of expecting a couple are getting funded, some of the bigger ones, nothing that jumped out by name and nothing that jumped out on a trend, at least as as I sort of paid half attention to it doing other stuff over the last couple of weeks.
Thanks. And then, so the next section is reports that have come out. And so for our audience and also for Adam, any reports that have come out it's worth calling attention to our audience, any findings from reports that are worth discussing?
Couple, and I feel bad I'm blanking, but I think it's advisory board. One of the big groups has done a sort of, review of 25, look forward to 26. Some of this was covered early in the year, so it is relevant for the audience. I can hunt them down, but I would suggest that start of the year, combine the end year, start of the year, you get some of these sort of like what's going to be new in the year kind of reports. If you'll allow me, one person, I think I was on last time talking about a report I had coming, but for any of you interested in kind of consumer journey and preferences in longevity, bearing on health. My company, we did a small consumer survey and report. So, you can go to our website and request that and we'll happily share it. And I had meant to spend more time. So again, nothing that I've consumed deeply, but I think there's a lot of like beginning of the year stuff that's been interesting. One place, and Steve, I don't know if you spent attention to, but I would point the audience, I think the bank Truist does a good job with some of its summary of digital health. So, for those of you who aren't getting that, that's a good source of, they do a kind of a review. They'll do some calls with public companies. So it's a good place.
It's great. Interesting. Thanks. So then a kind of a crowd pleaser, one of our audience favorites is just a technology that you use in your daily life that's improved your life. Could be a way to sleep, like listening to white noise on your phone at night, or could be the newest car chargers are much better than older car chargers for your devices, including for your laptop coming out of your car's cigarette lighter. And so I'll just mention an area. It hasn't improved my life yet, but I'm experimenting with this thing called OpenClaw, which is AI-based automation where you set up a computer that is solely dedicated to running an AI agent off of your laptop. So if you have a subscription to HubSpot, this AI agent will be able to use your HubSpot account because it's set up and it's running inside your laptop, your computer. And it automates tasks for executive assistant, automates tasks of responding to emails, automates other tasks. And so I'm going to check out this OpenClaw and set up a computer to run it. And I'll check that out. I'll let you guys know how that's going. So Adam, any thoughts on a technology that's improved your life?
Two come to mind, but neither super new. So I'm happy to share, although I don't know if I'd necessarily recommend it. I got a new car recently and it was a manual transmission stick shift. So I used to drive one, it was hard to find, but that has improved my life just to get back to the thrill of driving. So a little bit of like, less digital, if you will. I would say, and this may have been something you recommended to me. So again, not new, but I'd say that one thing is I have started using Gemini's, is it Nano Banana, their image creator. I've been trying to use Chat, and Chat's image creator is not good. And I find Nano much better, and Nano much better for image stuff in general. So I redid our Bearing on Health's website. I had it help me pick fonts and to kind of walk me through even how to set up the sites. And I know a lot of people are flipping around and there may be even a better one, but I've been impressed with Gemini on its kind of graphic stuff, at least more than chat.
That's great. That's interesting. And I made a decision. I'm trying to use AI more and more for productivity. And I have purchased the Google Workspace suite. So I have the professional version of Google Slides. I have the professional version of Gmail tied to my work email address, etc. And you always hear about these amazing features like Claude for writing new code software, or you hear about, Grok for making short videos or something like that. And I decided to pay less attention to that. And I've decided to use the Google Gemini suite for everything. Um, and so all day I'm in Gmail, so I will use Gemini for Gmail. All day I'm in Google Slides, I'll use Gemini for Google Slides. All day I'm in you know um, in Google Spreadsheets. I'll use Gemini for Google Spreadsheets. And then whatever new thing I need to do, make a thumbnail for a video or something like that, I'll use Gemini for that as well. And just by having it all there, I'm not worried about losing my training or getting lost in complexity or losing. I think Google will. It's making stuff for me. It may not be making the best stuff for a software coder, but it's making the best of me. And I'll just use I'll simplify my suite so that I can get deeper and more useful with each product in the suite by just going with Google Gemini.
I think that may be worth it. What I will say, and again, it could be because I've trained. I did not like chat for images, so I picked up Google mostly for Gemini for that. But then I'll ask Gemini to write something or draft something, and I'm not impressed. And chat does a better job on like first drafts of things. So it could be because I've been writing with chat longer. It has a better sense of who I am. So I do think they have some difference in what they do well.
Right. And then, so Casey writes, improved my life using ChatGPT to track my protein count rather than an app like MyFitnessPal. Yeah, thank you, Casey. I found MyFitnessPal to be thoughtful, but just too hard to enter data into all the time. And I used their photo tracker and I used some of their exercise and data point trackers. But that's really interesting and I guess somehow you have to keep it in memory and not be wiped out of memory with ChatGPT. I'll have to look into that. But thanks, Casey. So then let's see. Well, just mentioning personal notices. So my next show is on Wednesday, March 11th with David Shaywitz, MD, PhD, lecturer at Harvard Medical School. And the topic is going from generative AI to increased patient agency and better patient outcomes in healthcare. And that's my Boston audience. I'm doing one of my drinks nights on February 26th, Thursday, February 26th. And for my New York audience, I'm doing one of my New York Health Innovation nights on Thursday, March 5th. So to find out about these events, you can go to stephenwardell.eventbrite.com, and register for these. Any personal notices, Adam? Things you're doing, opportunities to meet you coming up?
No. I mean, the main will be at ViVE, so we're going to talk about that. For all of you in Los Angeles in, what is it, 2 weeks, a week and a half? Look forward to seeing you.
That's great. So now moving on to the second half of our show and discussing the conference ViVE coming up in Los Angeles in February. So we're going to look at questions like what are the themes people are going to be talking about at ViVE, and also how to prepare for the conference, how to get the most out of your time and your meetings. So why don't I kick off? I have some thoughts on this, but Adam, if you think about our audience, think of it from the perspective of a young software vendor selling into healthcare, possibly going to ViVE, and also a venture investor in our audience. How do you get the most out of ViVE, do you think?
Yeah, so maybe it's helpful to just give a little bit of like sort of what is ViVE like, and I'll do it with reference to health. Not to say that everyone's been there, but the same group that puts on health puts on ViVE. It's not quite as old, and so for those of you who've been to health, it has a similar aesthetic in the sense of the graphics are good. It's a well-produced event. It is not quite as big as health. Health has become the place. I am in Los Angeles. I am, long on LA if you want to do that. But I will be transparent that the LA Conference Center and kind of the surrounding area is not as easy a place as the Venetian Hotel in Vegas to have a conference. Now, I think Vegas is unique, and even the Vegas Conference Center is not like the Venetian. So this unique thing that like you're in the hotel and it's all there. So for those of you coming, you'll see the events, or the hotels around that. But no one needs to worry. Downtown LA is actually a really nice place if you haven't been recently. It's been revitalized since Crypto, what is now crypto.com, got built, the original Staples Center. But, it's a little bit smaller. The convention center is not quite as nice. It's a community convention center, but it has the same feel. Where it's different from health is health started, and Steve and I were talking a little bit about this, and most of you heard, the team that put together health said, hey, there's something broken in JP Morgan health conference, and we can do a better job kind of putting it all together. And so, I think a lot of people go to JP Morgan. It's been up and down. It was different through COVID, but JP Morgan, as everyone knows, isn't one conference. So it's a little easier to sort of reconstitute pieces of that and do that better. And so that is a place where all the innovation in healthcare really does go. I mean, some people sit it out. So that is full of the big companies trying to reach the smaller companies themselves, and the investors. ViVE was created to displace HIMSS. I think that's been a little bit harder. HIMSS is a single conference. It is in Vegas. So it wasn't a hodgepodge of things. And it was done in concert with Chime, which, if I have the acronym right, and thank you, Steve, for putting it, as a College of Healthcare Information Management Executive. So it is focused more on in health system, in hospital kind of work. Although my experience there is that's not quite as strong a boundary as you expect, but it's a little bit more there. And so you'll have a little bit more of the hospital folks there, a little bit more of technology working inside the hospital. Still a place where some of the earlier stage companies go. I don't see as many investors, but that is still a place where investors go, at least as compared to health. And I would say it is busy. It's crowded-ish if they're successful like they've been in past years. And so to get the most out of it, it's like health. Reach out to everyone you know, say, I'm going to be there. As we all know, not everyone will be there, but that's an excuse then to schedule another meeting, and just be deliberate about time management and where to meet and how to schedule. And I think it's probably just fair to assume that everybody will be there, or at least has heard it enough that it's not offensive. And I like to say to teams that I've worked with, or when I was running small companies, having an excuse to email is probably more important than the thing itself. So first is email everybody. You'll be at ViVE, anyone you want to meet, and some of them will be there. And if not, you'll schedule something else. In terms of scheduling, there are spaces inside. It'll feel like health that, but I'm already getting people being like, hey, can we meet at the hotel across the street, or things after. Last thing I'll say, and then I'll turn to you, Steve, is like health, there are receptions after, there are companies putting them on. And so, figure out how to get in that as well. I'm sure there's more to
Yeah,
talk
thank
about.
you.
Let me pause there and let you comment.
Yeah, thank you. So that's a really great overview. So just for our audience's benefit to remind you, so ViVE is February 22nd to 25th at the LA Convention Center. And I think that what people want to get the most out of ViVE is they want to meet hospital CIOs. And happily, ViVE is co-produced with Chime, and hospital CIOs are members of Chime. It's quite hard to actually get a meeting with a hospital CIO. You're more likely to get a meeting with a member of a hospital CIO office, who could be like a VP level, not a CIO level. In the distant past, you used to be able to meet at HIMSS or at ViVE. People like this in the hallways or for meetings. Now they're just too busy, but you can meet someone from the office of hospital CIO. And so I think you'll see good attendance from hospital CIOs, CMIO, and innovation office people. So CIOs have real budgets. CMIO and innovation officers usually don't have real budgets, but they're influencers in the sales process of selling to hospitals. ViVE says that it has strong participation from hospitals and also health plans. I've always seen a lot more hospitals than health plans there, but you can also perhaps count on from health plans having innovation officers from health plans, or other executive from health plans there as well. And then also venture investors. So I have seen a good number of venture investors come there, and it's often West Coasters. So people from LA itself, LA, San Diego, also from San Francisco, Bay Area, obviously. Maybe there's a little bit of Denver and Seattle coming as well. A little more of a stretch to have someone from Chicago or all the way from the East Coast who's a venture investor to come out there. But it's easy and fun for a VC from San Francisco. So what I recommend, for a young company, but it's not a trade show. HIMSS is a real trade show, and there's people who are buying and making their buying decisions. I would like to be a trade show. It didn't start as a trade show. It doesn't quite have all the pieces together to be a trade show yet. And so what I would do for someone in the audience is, like Adam said, I would sit down immediately after this show and I would make a list of all the venture investors that you know on the West Coast, and also hospital executives that you know and would like to meet, especially if you sell into hospitals, health plan executives you know and would like to meet, especially if you sell into health plans. And then I would write them and say, let's meet. And my The usual introduction is that I like to do is I will say, I'd like to hear about what you're seeing in the healthcare marketplace, and I can tell you what I'm seeing as well. Usually, people go there for the meetings, and so you have a good chance that someone who doesn't respond or is too busy or too think their life's too hectic, that they'll want to do meetings while they're at ViVE. And then if you have something truly newsworthy, like in the past, I used to write a report in advance of JP Morgan, and I would tell people I will hand you a copy of my report at the meeting, and so that got meetings at an even higher rate than just the more neutral one of hear what you're seeing and tell you what I'm seeing or whatever. So that's a technique. And then an interesting one is that a lot of people from young companies try to not pay the ticket price for conferences, and so here there's a well-known place at this facility that you go for meetings, and that is the Moxie Hotel. And at its ground floor, it has a coffee shop, and the coffee shop I think is called Bluestone Coffee. And people meet there, and there's no shame in it. And you'll have a VC from Andreessen Horowitz will not buy a ticket and will just show up and sit in that coffee shop. The problem is it's a really nice place and it's hard to get and keep a seat there. But I've done it. I've sat there and I've successfully kept my seat every time I needed a seat there. And so if you're in Southern California, you can just literally drive to the neighborhood, sit in the coffee shop, and then you'll people also try to figure out who's there at the conference, and then spontaneously on the fly on the afternoon of day one, when they figured out who's there, they'll write those people and say, hey, let's meet at the coffee shops. There's the pre work of getting those meetings, and then there's who you see there that day. And when I did it, I did not buy a ticket to last year. I did not buy a ticket to ViVE, and I kind of wandered around ViVE, and very, very abruptly, a security guy walked up to me and said, you can't pass this point if you don't have a ticket. So you're not going to get into ViVE if you don't have a ticket. There's also a trick at places like HIMSS where you can get an expo floor ticket. And that's really nice. An expo floor ticket might be 1/4 of the price of a regular ticket. And you're confined to the expo floor. But the expo floor is pretty nice. There's always a place to meet. It's air conditioned. There's plenty of space. There's plenty of place to meet. You can see your competitors doing and their expo booths, um, uh, that you can sit down with someone and talk, and then someone who bought the full price ticket is always happy to walk to the expo floor, which their ticket covers, and they'll meet with you, and you have your expo only ticket. So, but ViVE doesn't do that. ViVE requires you to buy the full price ticket, whereas HIMSS actually has an expo floor and lets you buy an expo ticket only, which is much cheaper. So you can't do that for ViVE, but you can do the Moxie Hotel, and there's other places you can meet, but that's the most convenient for walking around by foot. So, and then I saw, looking at their website, that there's many, many speakers in provider organizations, in payer organizations, and in other spaces. And so I would send people messages to people you already know, but then I would also look at their website and email those people in advance. It gives you a sense of other people, provider executives, payer executives. Also, you'll be in LA. Most people in healthcare don't have a reason to go to LA very frequently. And so you could add a day onto your trip. I say that as opposed to San Francisco, there's always a reason to go to San Francisco multiple times a year. And so when you're in LA, you can check out other things. You can add another day to your trip, and you can visit hospital innovation groups, and you can visit LA-based VCs, and those VCs might go for the conference for 2 days, but then you're staying an extra day on a 3-day conference, and you have other time to drive out and meet them at their offices in LA. So that's you could meet provider executives in LA. There's a lot of hospitals in LA, a lot of big hospitals. You can meet LA-based VCs in their offices, not at the conference in LA, on an extra day. So those are some of the extra steps that you can do to sort of get the meetings, leverage your network. So those are just some thoughts. And then I noticed from the ViVE website that if you bought the full price ticket, you can do what they call Payer and Provider Connect and Investor Connect. So this is auto-gen matchmaking, and it is I think so maybe you understand this a little better than me, Adam, but sometimes a weak version of this, I don't know which is at ViVE, but a weak version of this is that payer and provider executives and VC and investors who want to meet people will sign up and say, I'm available. And not many do that. And then vendors who want to fundraise or sell to them sign up. There's a lot of those, and try to meet with them. And that's not great. But there's other versions of this where somehow the payers and providers and the investors get some kind of compensation from the conference organization. They get a free ticket, or
Yep.
they get tickets to the VIP events, or they get something else, and they commit to
And
do
that's what they do here. And I have
4 meetings a day.
colleagues. Yeah. So I have colleagues, not for ViVE, but for health, from health systems who got free tickets agreeing to a certain number of meetings.
And so if that's the case, and it sounds like you're suggesting that is the case, then by all means try to participate in these. And so it's just a good way to meet people in the space, to get their full and frank feedback. Get get good meeting with them, and so the provider and payer and investor connect. And then they also provide for these conferences. They provide an internal messaging system for these conferences if you buy a ticket. And I have never found these to be great. And so it helps slowly over time to build up, the ability to email someone at their work email address, maybe text them, maybe message them on LinkedIn, somehow connect to them that way. But in general, senior people who are decision makers, and their assistant buys them a ticket, they don't think about the ticket or the conference until they attend. And they don't sign up early and eagerly for the online named account inside of the conference. And they don't make themselves available for communication by that. It's
And I
another inbox to check that they don't want to have to check.
and I'll say this is not an absolute statement, but compared to HIMSS, I think the health and ViVE conferences get more of these folks there by inviting them to speak, as opposed to the content itself is what's bringing, right? So HIMSS started as Steve said, as a trade association meeting for the information management professionals at hospitals. So they would go, never quite as much as like an academic clinician would go to the American Heart Association meetings or the American Diabetes Association meetings. If you go to one of those meetings, for example, as a physician, you're going to go to the meeting. Like that's what you're there for. And then the exhibit hall is a benefit outside of that. These tend to feel a little bit more like, people are going to meet each other to do stuff, and the executives who most people want to meet are there because they've been asked to speak or do something. It's not universal. It's just a relative weight. And so there is less people there who are like, I'm going for the whole thing for the content of it because I'm interested in the learning as much as some of the other conferences. And I think that's probably true at ViVE compared to him. So it does make it harder to get people's attention. I haven't been to HIMSS in a long time. I'm considering going this year, but when I used to go, people would go for the whole time. Many people go to ViVE or health for only a portion of the time as well. So that's just something to know about as well. One other point, Steve, I forgot, and again, relevant for those who have health as a reference, because ViVE is more of a hospital thing. And again, this is relative weight, but ViVE tended to feel more to me like ambulatory stuff, digital health. You saw a lot of like even consumer focused stuff. I will feel more inpatient, like in the facility itself, just because it's thinking about the hospital. So what that means is it is more inpatient focused. What it also means is you have more so than health, maybe less than HIMSS, but more so than health, you will have the med tech companies that build technical infrastructure for the hospitals there as well. So if a Medtronic, if a Philips, if some of these bigger companies are also in your partnership, investor or sales, they're more likely to be at ViVE than they would have been at health because they're part of the hospital ecosystem.
That's great color on who's there. And so Olga in the chat has just mentioned a checkout Minglium for receptions around ViVE. Sounds interesting.
Nice.
So some years I put together a curated list of parties and receptions at ViVE and at JP Morgan. I'm not doing one for ViVE this year. But Olga, you found a source, Minglium, that is telling us about receptions around ViVE. Thank you so much for that. And yeah, so roughly how to manage your day, as I said. So immediately you should be emailing everybody you know. And for most young companies, they want to meet with possible customers and also investors. And they'll be both at this event, and you want to email them. And I like saying I can hear about what you're seeing. I can tell you what I'm seeing when I'm there. I like that kind of hook. It's very general. In a perfect world, someone would write back and say, "I'm not going, but my friend is. Here's my friend," or whatever. That's great when they do that, or you can invite them to do that in your message. And then when you're there, you're finding out who's there, and you're pinging those people and saying, "Hey, let's meet up. I saw you. Let's meet up here, whatever." And so that's helpful as well. And I target about 7 people a day. And so you are doing a really great job if you have booked 5 or 6, 7 would be max. And so if you booked 5, 6, 7 people in a given day, and then things slow down at about 6 and people start going to receptions in the evening. I don't know the number of receptions at ViVE. I think it's a smaller conference and it hasn't been around as long. But the number of receptions in the evening at Health and JP Morgan are absurdly high. You would not, hundreds of receptions each night that you could go to. And these are a lot of fun. And so for those, I would target any reception put on by a venture fund. And so the way the receptions work is it's very helpful to email someone you know at the firm and ask them if you can attend, or even email someone you don't know and just say, can I attend or whatever, and they'll let you know. It turns out that these parties and receptions are usually very susceptible to crashing as well, which is to say that you didn't hear back, you're not on the list, it doesn't matter. If you go, and on rare occasions you go and there's an hour line outside the door. Well, you're not on the list, you're not going, you might as well not try. Usually there's not enough people attending. And so you just walk in, no one cares that you're not on the list. You meet the people who are there, no one's checking or whatever. And so usually you try to get on the list, but even if you don't get on the list, you just go anyway and
And
see if you.
Steve, real quick on that, sometimes it's easier, even if you're not on the list, if your friend is, and you're like, oh, they're on, I'm not. And like, so, there's no negative to the person who's on the list. If they show up with someone who isn't, they're still allowed in. And sometimes it can help the person. So obviously try to get on the list, but if you can't show up with a friend who is, and that can help you get in as well to a lot of these. I don't have the full calendar, but I can tell you I have 3 receptions on Monday. So it is a relatively a packed agenda.
Yep, and people go to multiple receptions as well. And usually the multiple receptions have free food and free drink at them. So,
and actually, can I make one plug for LA? Some of you will know this. Take a Waymo if you need to go somewhere if you haven't yet. Like, the fully automated car is worth trying, and they're fully available. You cannot take them to the airport in LA, but most everywhere else they can go. So that's worth trying as an added pitch to come here.
And so, by the way, if you are a young company executive at this place, in terms of the meeting, I would spend nearly all the time in the meeting just and let's say this person is either if this person is a possible buyer, usually the way that sales happen is they're enterprise sales using a consultative selling method. And so what you need to do is learn as much as possible about the pain points, what's going on, and the pain points, what's going on in your area. You sell a calendaring app or something like that, and find out find out, from them who they're currently using, who they're considering, whether they're happy with their current solution, what their problems are, problems of not being well managed or whatever. It's a wonderful opportunity to get them to talk about themselves and their problems, etc. Then with venture funds, to a VC are both an executive is raising money, but you're also an expert in an important, expensive, pricey market that has big problems that's changing. I would use it as a chance to showcase your expertise in the problems in the market space. And I used the example of how LLMs used for direct-to-bill billing are better than prior generation technology. I used that example earlier in the show. And so you could talk about the huge problems that hospitals have with getting to direct to bill, and the problems they have with young people don't want to be medical coders anymore. And so hospitals are seeing older people retire and not being able to hire younger people to do that job. So hospitals having, staffing problems, and the labor itself is awful and full of errors and problems. And I would use that as a lead up to, why this is an important market undergoing technological change and should be an area of interest to that VC. And you can also ask them what their own fund thinks is interesting, and their own fund's themes they're interested in, and their stage of investing and that sort of thing. So that's how I would try to do I try to book 7 meetings a day, and then 3 receptions at night each day. I might stay an extra day and meet people who are LA based. And then let's actually address the note of fun other than receptions.
Sorry, could I add one quick thing about meetings? So this may be obvious. This is my personal experience, but I've heard it echoed by a couple. I find it very hard to close any business in a meeting. And while it's possible to meet someone, it's also harder to start a net new relationship out of it. Where I'm going with this is, even if it's not logical, like in a sales process or an investment process, to meet someone in person, I would encourage you all to think about the value of that human relationship and that time. And so I spend a lot of time with sales teams I've worked with, be like, what are you trying to close for in a meeting? And what I'm basically saying here is maybe don't be so directed that you're going to get like a specific next step of anything out of this meeting. Think of it as building the relationship, and you will put FaceTime in with them. They're often more honest about like personal life when you meet someone in person. This is standard stuff just in a world where so much of our life is done and you can close deals without ever meeting someone. These meetings are a chance to meet someone in person, put a face to a name, and then that helps accelerate these conversations later. So it's good to have a goal and be directed, but also don't, to Steve's point, like if you've got two meetings and there's four other people that you know and there really ain't anything to do with them, but you've got time to meet them, that is really valuable to do with these meetings. And then you move them forward in such a way. I can say that we closed a strategic round for a company I was running in large part because I ran into the CEO. I mean, not ran into, I deliberately found the CEO, didn't talk any business, just shook hands, put a name of my company to what he was hearing, what it was getting up for investment. And that was a piece of how the deal got.
Yeah, and so there's another use of these meetings, which is that if you are actually raising a round of funding, then these days, all first meetings take place as video calls. They take place as 45 to 60-minute video calls, and then they tell you whether they're still interested in you. And then it's your job to somehow meet them in person some way. And the way that you do that is by going to investor conferences or trade shows or city tours. And a city tour is when you simply declare that 3 weeks from now, I'm going to be in San Francisco from Monday to Wednesday, and can you meet with me? And then you try to generate a piece of news. And VCs care about three kinds of news. They care about sales news. That's the most important. Syndicate news. A hospital corporate venture fund says they'll put in $5 million if we find a lead investor. That's syndicate news. Product news. We've launched version 2.1 of our product, which has increased functionality, which increases our total addressable market. And so those are the three kinds of news. So you figure out which one of those news is new that you can tout, and then you go to those people and say, let's meet and I'll update you on this news, this recent company news of ours. But you want to try to figure out a way to meet them, even if you have your next call scheduled for 2 weeks later, and you want to meet them for half an hour at the conference, and it won't be as in-depth, high quality bandwidth as a hour-long video call with slides would be, but you want to try to meet them in person, and so this is one of those conferences you can meet them in person at.
And actually, one other group that's there, I assume, because I was surprised how big a presence this kind of group had at Health, so I assume it's at ViVE, is what I'd call like aggregators or affiliate groups. So the one I know very well that I'm very close with that I think is a great organization in Los Angeles is called Scale Health. They will have a pavilion. Health had a lot of these pavilions, whether they were like Matter from Chicago or Scale from LA, or even the accelerators of different strategics. Those folks aren't going to be your buyer and they're not going to be your investor, but their business is to connect. So particularly if you know one of those and are already associated with, have a meeting with them maybe early and be like, oh, who else is here that I should meet? And their business is to help you network. So that's good. And even if you're not connected to them, if they're in a space that's of interest to you, so let's say you are, and I'm not saying American Heart will be there. I know American Diabetes will be, but if you're in that space, try to meet with them early, and then maybe they can help you figure out who to meet with the next day or two. So don't discount kind of getting early to these hubs or these connector kinds of organizations. And I expect they'll be there in pretty decent volume at ViVE because there was a lot of those booths.
So let's do spend a moment on fun. And so the receptions are fun. I like these conferences. I like the programming of these conferences. You have to buy a ticket to see the programming. I like the receptions. The receptions are almost all unofficial. There will be an official reception, one in a large place, with free drinks if you buy your ticket, but the vast majority of them will be put on by a consulting firm or a venture firm or Athena Health or someone like that. The Athena Health parties used to be the best parties, in part because Jonathan Bush would show up and do something outrageous in the past. But something else for fun is I'm going to throw out there the Broad Art Institute, which is there, a museum. So it is an amazing spaceship-like building, and inside is modern art, and it's a world-class experience. And I think it's walking distance from.
It's a little bit far. It's definitely walkable. It's kind of on the other side of downtown than from where the convention center is. And MoCA, which is the Museum of Contemporary Art, is across the street. So two great museums, and the collections are really nice. So if you are an art fan, definitely could walk. You may want to Waymo or Uber or Lyft. Just to save the time.
And then there's the iconic, if you're there for an extra day, there's the Griffith Observatory, and there's also, who has the museum that's like a Roman palace or something? What is that?
So there's the Getty Museum.
That's
There
it.
are two Gettys, so just make sure. So the Getty Museum proper is, and I'm biased, I'm LA, but maybe the most impressive building in, like, certainly the city, if not the country. It is on top of the hill. If you're coming north over the 405, they shaved off an entire hill, spent $1 billion plus building this, has an incredible garden. The collection's good, but doesn't live up to the building. And then what you're thinking of is the Getty Villa, which was a recreation of the villa in Pompeii that they discovered under the ashes, which is on PCH at Malibu. So that's a little bit farther. These are both not downtown. Downtown, iconic, must see LA is the Music Center. So the Disney Music Hall, which is the Frank Gehry building that's all metal. So there's some great architecture downtown. The cathedral is a good to go to. And then just, I know, Steve, I interrupt you. The Lakers are playing Sunday and Tuesday. Crypto is next door. That is, we're seeing. I don't know if the Clippers are playing. They don't play downtown anymore, but Intuit Dome is fully automated, fully technical. So it's worth visiting more as a technology than I'm a Lakers fan than the Clippers. But yeah, downtown is a really very happening place for tourists. And a lot of it is anchored at where the convention center and where crypto are.
And you said there's the Disney Performance Center. Is that what it's
Disney Concert Hall, it's called, which is
could,
the
are there shows all the time and someone who's
Yeah, there's
there?
always shows. It's where the Philharmonic is. I don't know what's playing then, so they'll have a whole number. It's where the classical is. But even if you don't want to see music, the building is, it's in all LA movies and it's iconic. It's this sheer metal face that's curved faced of metal kind of all over, and it's been recreated in kind of other cities. So it's worth seeing. There's a like a downtown architectural tour. And then most of you have been, but Hollywood is not quite there. But if you want to go see the stars and the handprints and those things, that's gonna be like Hollywood, which is a little bit west.
It's awesome. Well, for our audience, any last questions? And we have an LA native. You have two people who've been to ViVE, and we have an LA native here as well. And so, Paolo says that the Getty rocks. So thanks, Paolo. Um, and But we'll see if there's any other questions. And Adam, do you have any other thoughts, advice, tidbits for people who are going to ViVE to make the most of ViVE? Ideally
The
for their
one
career.
thing I would add, and I'm happy to offer this to anyone, I do a probably next Thursday, because it's not meant to get people there, but it's like a slight ViVE preview to my newsletter, and then it'll go on LinkedIn. So if any of you want your name and company in that, send me a blurb on LinkedIn or find me by email and just say, why are you going to ViVE and what are you hoping to get out of it? And I happily include that. So think of it as one more impression of the many that you might need. And if that's helpful, happy to do it. And then, yeah, please look me up. I don't know how much time I'll be in the convention. I don't know about you, Steve. When I go to conferences in LA, ironically, it's harder to get to some of it just because your rest of your life is there than when you fly somewhere and don't have to have kids practices or other things. But I will absolutely be there and look forward to seeing anyone. And hello, Paulo. It's good to hear your voice digitally, I guess.
Yeah, thank you. I'll mention there's two, I would say, social trends that will be evidenced at ViVE. And that is, so one of them is called the walking gallery. And so if what I say sounds very appealing to you, you can look this up and reach out to people and participate in this. But the walking gallery is that there are people who bring to these conferences a bunch of extra jackets, and the jackets have paintings on the back of them. Have you seen this, Adam? Do you know about this?
I think Paulo, if I remember correctly, is one of them. So I'm not sure. I'm not on the little live chat, but he's
And
I think he's one of
Paolo,
us
what
that.
what exact organization is this affiliated with, and what is the cause? And I've heard that it's like patient engagement may be the cause. For this. People are welcome. You can inquire in advance. You can get one of these jackets with a painting on the back and walk around. Healthcare is a greater cause industry than other industries. There are people who are here working their whole life on diabetes products because their sister died of type 1 diabetes when they were 15 or something like that. And then the second one is the pink socks. And so here there's a website called pinksocks.life. So you too can beforehand or at the event get pink socks. And I think this is about raising kind humans. But there are people these are two of these causes here. It's awareness for people with rare diseases is another one of the things of pink socks. But you'll find that people have pink socks and bring them specially for this kind of occasion, or they buy them when they're there, or get them as gifts when they're there, or buy them in advance, or whatever. So Paolo says he's part of the walking gallery, and there's a Facebook site called facebook.com. So if this appeals to you, these people will be present there, and you can find them, and you can get your jacket, or you could you can find a jacket at a thrift store and paint your painting on the back of it, make it your own. You can bring your pink socks, or you can get pink socks when you're there. So Paul says that the walking gallery, the cause, it was started by Regina, and the cause is to ensure that patients are the focus of care delivery. That's good. The healthcare system has a lot of different pressures, a lot of different actors on it, and they don't always put patients at the center of care delivery, but they should. And the Walking Gallery project, helps raise awareness for that. For Adam, any final thoughts on how to get the most out of ViVE?
No, I think we've covered it. It's a fun conference. It's a little more manageable than health, but has a lot of the same benefits. So I hope you'll all get the most out of it. And I think I'd say that, like, for all these, this is one impression, one step. Like, I don't think anyone should think of this as a be all end all, and that's obvious. But if you think of it as incremental progress along a number of fronts and are deliberate, as Steve said, about who do you want to meet and how do you meet them, and just sort of checking that off, this and other conferences will be very successful.
Very cool. Well, thank you so much, Adam, and thank you so much to our audience. And you've been listening to the Digital Health Investor Talk show with host Steve Wardell. You can call on Wardell Advisors when you're ready to improve your growth and fundraising and strategic opportunities. Many thanks to Adam Kaufman. And so we'll be publishing this show soon on Apple Podcasts and Spotify. So looking forward to see you at our next show. And I think Adam's looking forward to seeing you at ViVE. Thank you.
Thank you, Steve. Thank you, everyone.